Hi, I'm Hewis, and I'm coming to you from my vacation home in Maine, and the market we're looking at today is the NASDAQ. What you see on the screen is a chart of the NASDAQ and showing the recent high in 2007 and then the subsequent decline all the way to March of this year. And you've had a pretty strong move right up here in a relatively short period of time, from basically March through to the present time. So what's going to happen to this market? Well, a couple of things we have to look at is the history of the NASDAQ. The NASDAQ actually traded at 5,000, it's hard to believe now, 5,132.52. That was the all-time high, and that was on March 10th of 2000. And that was the height of the dot-com bubble. From there, the market dropped quite dramatically, making a low of 1,108.49, and that was on the October 10th, and that was 2002. So you can see a pretty dramatic fallback. Well, a subsequent rally from the lows here took the market up to this point here. That was practically a 50% retracement from the lows seen in October to the highs we saw just in 2007. So where are we now in this cycle? So I believe we're in a secular bear market in the NASDAQ. So let me take everything off the screen, and I'm going to put our Fibonacci tool on, which is right here, and we're going to go from the very high, drag this down to the lows, and as you can see, we are very, very, very close to the 50% level, and we're right around here, and we just missed it by a little bit, but it's very similar to the pattern that we saw earlier when we had a move down from the highs of 5,132 in March 10th of 2000 to the lows of 1,108 in October 10th of 2002. So this move up from here really got us to an area that could potentially be a problem, and it's a 50% retracement level. Now the action we saw today, I'll take everything off the screen again, and I'm going to put a little and scope this in even further. Well, you can see we got very close to the line right here, and then we've had a pretty dramatic drop off in a very short period of time. So this is, we've had a pullback right here, as you can see, and it looks like we're going to continue going down. The one thing that does have me concerned about this market is, it may be too early to say that yes, it's going down, but it's something certainly to look at, and this is the MACD. We've talked about this before, but what we have today is a divergence. See how the market's going like this, and prices are going like this. So prices were going higher, but the momentum of the market was actually turning down, and that is not a good sign. So here we're at this 50% level. We have a divergence, a negative divergence on our MACD indicator. I'm going to put one more indicator on the chart. Let's take this off for the moment, and I'm going to go up to our on-chart studies, and I'm going to choose the parabolic stop and reverse. And as you can see, we're very, very close. The parabolic is shown this way. I'll show you very quickly. So I'll take this off the screen, close this out, close this down, move the cursor over here, and you can see At the top, where the purple is 1960.89. Really a very close level. So is this the start of a major negative trend? Possibly. It's too early to say yet, but what we do know is we're probably going to see this market and maybe have some high level distribution period right around these levels. But this certainly is a key level to watch for. If we go below this level, it's going to put more pressure on the market, but this is not a good sign. This divergence we've seen in the MACD, the fact that prices have gone higher but have not been followed by the MACD, indicates potentially we're going to see this market go lower. So let's watch it. We're in the September-October period, which can also be a problem for equity markets. So stay tuned, and I would watch the trade triangles, because right now I'm going to show you very quickly where they stand. We have got our monthly triangle is still very positive, long from 1,665, also long from 2021 on the weekly. This could change very quickly on the weekly, so I would say if it goes below this level here, we're going to see a change in the weekly. So I would say stay tuned, be careful. There's going to be some great opportunities in this market this year. So keep your powder dry and get ready to act when you see the trade triangles kick in. This is Adam Hewison coming to you from Maine. Thanks for listening.